Uh, Very good afternoon. I think you have been here from morning to now. I'm just between you and lunch. I believe lunch is provided, right? Yes, please make sure you go for your lunch because why? You are able to look at all the different projects around this area. And I'm very sure, like what Eugene have just mentioned, some of those ideas for you to look at. But before I go into my topic proper, if you cannot remember whatever I say today, please remember these slides because it's important. Like what Eugene said, many different people have different profile. You have different expectations. So what we like to share with you is just the overall macro. But at the same time, okay, I want to also share with you a later part, what are some of the low-hanging fruits for you to take on for property investments. I think ST Property organized this topic is very timely because if you look at the first quarter, interest rate in Singapore has risen tremendously. Basically, the first 3 months, interest rate has gone up by more than 100%. If you look at the different headlines by Zhao Bao, Straits Times, Berita Harians, many of these concerns is that interest rate, are they rising so fast? If at the rate that is going, within 3 months, interest rate go up by more than 100%, by end of this year, could it go up by 400%? So before we actually look at how fast this interest rate may actually goes, let us first take a bit of understanding what is the Singapore interest rate trend. Because what you read on headlines, you hear SIBOR. What is SIBOR? Singapore Interbank Offer Rate. So people have used this so common that until some people say, hey, if SIBOR going up so high, since got Singapore word in front, ask government to reduce the interest rate. And then what is this SIBOR got to do with housing loan? Because SIBOR actually has nothing to do with housing loan. It is just a reference. Because SIBOR was introduced since 2006. Because during that period of time, a lot of banks were rising interest rate because of economic situation. So a lot of homeowners were making noise. Hey, how come the bank can just increase the interest rate as and when they like? But of course, the overall background is because of economic changes. So therefore, the Association Bank of Singapore, they came out with some policy and said, all right, we will peg it to SIBOR, example. So that's a reference rate. There were some different peggings, CPF rates, then you have the swap offer rates. So I just want to do a summary. SIBOR doesn't influence the interest rate for your mortgages. It is just the reference. But if let's say the bank say your interest rate package, SIBOR plus 1%, and if SIBOR is 1%, your total interest rate will be 2%. So that's why now a lot of people are focusing on SIBOR. And since 2006, there are many people now, when they take on a housing loan, they use what? They use SIBOR. In the past, you have those SOR rates. Anyway, if you're on SOR rate, please watch out. Because SOR is deemed to be more volatile. So let me just take a look on SIBOR. So since we now know SIBOR is just a reference rate, so what influenced SIBOR? SIBOR, as the name sounds, Singapore Interbank Offer Rate. So therefore, it's actually determined by the market forces. That means how much does the banks that require the funding among each other. And SIBOR draw reference to US Federal Reserve rates. So if you look at this chart, it clearly shows you that our 3-month SIBOR moved very closely with the US Federal Reserve rates. In fact, it's almost 90% correlation, which is why US Federal Reserve rate has been so low for the last few years. We have been enjoying a low interest rate environment. So much so until people say, hey, how come interest rate can go on? But the fact is, interest rate is going up. But if you look at the last few months, SIBOR has gone up a lot. How much? Right? Just give you a rough gauge, from an average of 0.41% to as high as 1.02%. Now that's more than 100% increase. Naturally, people are very concerned. So now the question here is, how come the interest rate has been slipping for so long, at least for the last 6-8 years, Why is it that there's all of a sudden spike? Right? Just to go back a bit, it all triggered by last year, US stopped the QE. QE is qualitative easing, AKA, that means stop printing money. In case you're wondering what is AKA, it's called also known as. No, you know why? I have 3 young children. Now when we talk, I have to figure what they put as abbreviations. Thank you, they put TQ. A lot more other abbreviations. Okay, so anyway, US started to stop printing money. Then they say, I'm going to increase interest rate. Actually, they've been doing this for the last 9 years now. I'm going to increase interest rate, but they never increase one. And you must say they are very brilliant, because just talk only, they can influence the whole world already. But let us look at what are the record, the trend. Now, if you look at the first top bar, over a 20 years period, Singapore SIBOR 3 months is 1.84%. So if you look at your mortgages, if your mortgages charge you a premium of 1.25%, 1.84 plus 1.25, your interest rate will be easily 3%. Because US Federal Reserve over a 20 years period is 2.85. But I want you to look at the next table. Why the next table? This is actually more reflective. The reason is, over the last 6 years, US Federal Reserve have been actually maintaining a near zero interest rate environment, which is, right, economics what we call abnormal. So if you strip away the last 6 years of 0%, to be more reflective, US Federal will be 4.36%, and Singapore SIBOR should be about 3%. So 3% plus another premium of 1%, my friend, you are looking at the interest rate to eventually reach 4%. I'm sure in your mind now you're thinking, so will a rise in interest rate result in the drop in property price? I will show you later what are the other factors you need to look out for. But for you, from a personal financial point of view, on the average, based on the 25 years loan period, a 1% rise in interest rate will result in your installment increasing by about 12%. So that is quite a big jump. So if let's say 3%, you are looking at a potential rise in installment of 30%. Now this is the chart based on the 8th April. Now SIBOR has been very volatile. But good news, okay, or a bit of consolation news. 3-month SIBOR, which is the most commonly used for mortgages, now is about 0.94% as of yesterday. Okay, why? Actually, it shows that our central bank is really doing their job. Why I say so? Because if you still remember, in January, MAS unexpectedly announced that they are not going to maintain, or they are relaxing the Singapore currency appreciations. So that one resulted immediately a drop in Sing dollar. Already US dollar are rising against Sing dollars, plus this news, and why MAS at that time make this decision? Because our inflation has been near zero, and oil price is very low. So therefore they find that, I may want to take these opportunities to lower a bit of our Sing dollars, to boost economics, to boost export, and more importantly, to win over tourists. If you have noticed today's Straits Times, they actually reported lesser and lesser Malaysians are coming to Singapore. Very sad. How many of you here are Malaysian? Because why? Coming to Singapore is becoming a lot more expensive. Even by sending their child to polytechnics, a rise in the Sing dollars have resulted one parent have to fork out another additional 800 ringgit. Now that is a lot of money, okay, for average family. But later I want to also just share with you, so is there any hope to buy Malaysia property? Especially when ringgit has actually depreciated so much. Okay, but we want to, especially for investment, is looking forward, not looking at what happened now. What are the trends? So Sing dollars, because of these changes, it resulted in SIBOR spiking up. Right? If you recall earlier on, I showed you US Federal Reserve and 3-month SIBOR, we move quite closely. That means we follow them closely. But because of the changes in policies in January by MES, Sing dollar depreciate further against US dollars. So because of currency fluctuations, it resulted in a spike in SIBOR. But good news, MES, probably one of those reasons, they actually adjusted, or they came out to announce this week only that they will continue the gradual appreciation of Sing dollars. So immediately, Sing dollar went up, and there is some stability in the market, SIBOR dropped. So now the latest SIBOR as of yesterday is 0.94%. Now some people also say, hey, since our governments are so responsive, why can't they just lower the interest rate or make sure the interest rate stay the same? I mean, these are economics. I mean, nobody can say, I want to keep the interest rate at this level, because all countries need certain inflation. But Singapore is a bit more unique because why? We do not rely on interest rates to maintain our economic policies. We rely very much on Sing dollars, which is why, if you have noticed, at Raffles Place, when you see a lot of people queuing around money changer, exchange rate has moved. And then you see now a lot of your wife looking at newspaper, they are looking at where to go for holiday. Because if you look at the currencies, US now quite expensive to go already, but Japan, favorite place. Europe, another good place to go. Even London and Malaysia, definitely a hot favorite. I think now ringgit touches about 2.7. But over here, I just want to show you another item. Why Singapore property market will continue to be a sought after place? Okay, because there's always both sides of the angle. One of the angle, when Sing dollar is strong, they create or it give foreigners confidence to invest in Singapore property. A very easy relations is Indonesia. If you go back to 1996, Indonesia rupiah is 1 Sing to about 1,006 rupiah. Today, 1 Sings you can change about 9,005. That is why a lot of mates still want to come here, because they are able to bring back more money back home. But now if you are Indonesians, does it make sense to buy Singapore properties? Even if the Singapore property do not appreciate, just in terms of currency itself, you are already able to benefit. In fact, we have some Malaysian customers who have actually invested with our companies because we are a financial advisor. A lot of the investment, they came in at about exchange rate 1 Sing to about 230, 240. So it's not too long ago. So for a lot of these Malaysians, they have already benefited or gained tremendously from the exchange rate, plus the potential capital appreciation. Right? So what you need to do now, right, monitor the exchange rate. So because beside the shopping destination for you to plan, the other area is to see how it will actually influence our interest rate. So, which is why people ask, how will interest rate goes? With the rise in MES policies and with US Federal Reserve continue to play this show, don't show kind of games, I think interest rates will be very, very gradual. Now, because US have a problem, they cannot increase the interest rate too high. A high US dollars is no good for them. Why? It will affect their export capability. And US economy is still recovering. Right? So they need to be very sure. And don't forget, a lot of them are still having negative equity, meaning to say their mortgages, right, is still higher than their property value. So a rise in interest rate will not help their people. So that is why, my view, US will keep the interest rate rise gradual. And another angle to look at is the other countries. When US is saying, I want to increase interest rate, I will increase interest rate, but they also scared to increase interest rate because Japan say, I print more money, I also keep my interest rate at near zero. Europe also say, I print more money, in fact, I cut my interest rate. China also say, I cut my interest rate. Okay, so, I mean, I don't want to give you too much head damage in terms of economics. But overall, what you can just sum it up is that all these big continents are reducing interest rate. How far you think US can increase in the interest rate? Already by doing so, all these currencies have depreciated. No, US dollars has gone up against all these currencies. If US raise the interest rate too high, too fast, it will make US dollars even stronger, which will not help US economy. But they have to keep saying, I'm going to increase interest rate, I'm going to increase interest rate, so that people say, okay, going to increase already, so I just hold on first, I just watch out. But definitely, US need to increase interest rate because why? They need to promote inflation. So what is the rate that you can look out for? They have publicly announced 3 years target, US Federal is going to increase the interest rate to about 3.75%, which will lead to Singapore rise in interest rate. Okay, I mean, so much so for all the macroeconomic. So as an individual homeowners, what can you do? Or what should you do to plan for yourself? Take on this illustration, someone age 40, 8,000 salary, 800,000 loan, 25 years loan tenure, which is very common for homeowners. A summary, a total liability will have increased by 21% just on the interest cost, right? A change of interest rate of average 1.32% to about 3.4%. And I've shown you all the numbers, right? 3.4% in the near 10 to 15 years seems to be a very likely numbers. But there's more to that. Okay, let's look at this number. If let's say interest rate increased from 1.32% to 1.9%, basically your installment will have increased by 6%. And if I fast forward, where 1.32% go up to 3.4%, your monthly installment will have gone up by 20%. Now that is a big problem. Why? Because according to our statistics, I mean SINSTAT statistics, Singapore median household income in 2013 is $8,292. Average family. So a 800,000 loan is also quite an average amount, right? Therefore, is half of an average family household income. And at the same time, our increase in household income for the last 6 years average is about 5.5%. I'm sure some of you may experience more than that. Although I look at the statistics, I don't feel I have that kind of increment. So if you don't feel so, even more dangerous. So how do you manage your rising interest rates? Okay, Eugene have actually covered this TDSR. But what I like to highlight, actually, if you look at these policies, there are some low-hanging fruits. I have this book called Grow Rich Singapore Style. I brought some over here today. Now, the key essence of this book is really, as a Singaporeans, I think we are all very proud of what the late Mr. Lee have done for us, that enable us to really have a market that we can all look out for, that we can have asset appreciations. So if you are Singaporeans, you should see how to take advantage of all these policies that he has created. One of them, okay, buying a BTO flats, getting into an EC. And then the policies have certain changes. Okay, why I say if you qualify for EC, look into this. Currently, if you are to buy a brand new EC, you are subject to 30% MSR. So the developer, when they sell, they have to take into consideration of this. Because if you buy a private condo, you can actually get a higher value. But you buy a brand new EC, you can't because of the loan. You understand what I'm saying, right? Because 30% and 60%. But do you know that EC after 5 years TOP, from a financing point of view, is subject to TDSR. That means to say, for a buyer who buy a resale EC, they are not subject to MSR. So what does it mean? If you can enter into a good price, 5 years later, the new buyers is going to be able to afford a higher price. So that's why I say this is one of the very low-hanging fruits. But provided you qualify. I mean, if you're my age group, then maybe a bit difficult. Then you try to ask your children. Really, I have so many questions that come to me. Recently, one of my staff was just asking me, should I buy a BTO or should I buy this en bloc so that I can get certain other place? Or should I, what should I do? Okay, I think it's very good that people are looking into all this, because if you don't even bother, then you will be where you are. And according to HDB statistics, right, 60% of the HDB owners are still staying in their first HDB flats. Nothing wrong with that, but you may not have really taken advantage of the market cycle that our market has given us. Okay, so I think very important things, right? Does high interest rate result property market crash? What do you think? We have been so used to the low interest rate, we have forgotten what has happened in the past. Okay, caveat, my caveat. Because this chart here is just for illustrations. Because it doesn't respond, right, into the correct exact time frame. What do I mean by that? The top chart represents the URA price index. The second chart represents finance company interest rates for a 15 years loan term since 1997. So if you can see from here, our interest rate was about 7%. So during the financial crisis, right, when interest rates spike up, property price actually came down. Property price do come down. And when interest rate was staying stagnant, and if you look at the property price index also stays stagnant, and our economy is doing well, next time you see such trend, right, you can just really pawn whatever you have, buy property. Because really, the market went up. Okay. So I mean, just my caveat, this is just a general illustration to show the trend, right, the trend. And during the last global financial crisis, our market were able to pick up quite fast, the property market, because the interest rate not only stay low, it went lower. So therefore, it actually helped homeowners to be able to take on the leverage. But this is where everyone needs to be very, very mindful. It has helped you to take advantage of the markets when a rise in interest rate, for those of you who have not done proper financial plan, is going to work as a double-edged sword. Meaning to say, it's going to be bad. But the other thing to look out for is GDP. I mean, we can talk market is going to be good or market is going to be bad. Eventually, would you agree with me? Fundamentally, it must be go with GDP. That means our country gross domestic product. If a GDP is good, it shows that our economic situation is good. Naturally, it will be helpful for property market. That is something that is very fundamental. So let's look at here. And it's quite closely related. If our GDP goes down, the lower table is actually talking about GDP. And you can see that our property price also generally come down. But from the period of 2001 to 2007, what you can see is that our GDP has been rising, but property market has been doldrum because they were recovering from a big shock, right? Which is why our government is very concerned. They want a very smooth, consistent property market. They do not want a roller coaster where everybody have heart attack. Because you look at our property price index, over the last 10, 15 years, although over long term it has done very well, it does really train your heart very well also. So based on here, our GDP in 2009 went up, which is why, coupled with low interest rate, the property price went up. But what is a bit alarming here, is GDP has been low. So GDP for 2014 is only 2%. And for this year, it's expected to be about 2 to 3%. But we have an inflation of near zero this year. Okay, so these are some of the things to look out for. But will this really create a big problems for the Singaporeans? Now this chart here, we take into considerations of the share value, CPF, property value, life insurance, and all the deposit. So you can see from here that Singapore actually is in a very good situation. The orange line here represent the liabilities. So based on these numbers, the total liabilities are only about 16% of the total assets. Okay, a few things you can gather from these numbers. First, overall, Singaporeans are not too highly geared. Second, governments will have to factor this asset value because they will have to see how to calibrate and balance their policies to ensure that our property value will continue to be consistent. Because a sharp drop in property values means to say the asset may actually fall. But if you look at all the cooling measures that they have introduced, actually when you look back, it's really very good, especially TDSR. TDSR that was introduced in 2013, if you have bought property after 2013, you have no worry. Because why? The MAS have already done the mortgage stress test for you. But for those of you who bought before 2013, you have to ask yourself, have you been highly leveraged? But if you have bought the property in year 2000, 2002, you probably bought it at a very low price. Your mortgages is also not very high. So what you can do as a final action plan, first, conduct a mortgage stress test. What do I mean by mortgage stress test? Ask yourself, what are your total outstanding loan amount? Based on the 2% interest rate of 500,000 loan, monthly installment 2,005. But interest rate goes to 5%, your monthly installment is 3,003. Can you sustain? If you are doing property investment, can your rental can even cover that amount? Because if it doesn't cover that amount, you have a problem. Second, take immediate actions. Go and check out what are your interest rate. Then try to do a reprice or refinance. But this is not so easy. You know when the first quarter, right, all the interest rate was shooting up. There's this particular banks, I mean over here I shall not name the banks. This particular bank came out with a very attractive fixed rate package. They were swarmed with few hundred loan applications. So much so, they have to stop. People are still applying, no, but they say, sorry, I cannot offer anymore. So it's not about you, never mind, I take my time, go and shop around. You have no time. See a good package, lock it in. In fact, today, we know there's one bank that is still offering a very, very attractive fixed rate package at about 1.6%. I was told they will withdraw this on Monday. I don't know how much I can help you, but STProperty is kind enough to give us a booth. So I've arranged two of my colleagues here today. During lunchtime, I'll also be there to answer to any of your other particular questions, specific questions. You can go to our booth. You can just give us your particulars, right? We can send you the package. And go and take immediate actions. Because why? The package is going to be changed. Interest rate is going to go up, definitely one. I only give you a consolation is that interest rate may not go up as fast as what has happened in the first quarter. Right? Because government around are also taking cautious approaches. But that doesn't mean to say interest rate will not go up. You better take actions when the interest rate is still manageable for you. The other thing you can consider, partial repayment. Now, before you even do that, you have to ask yourself, are you in the right situations? Because the best is to conduct a proper financial plan, to go through a proper financial plan. Why? Some of you may say, I want to use my CPF to pay down. But you use your CPF to pay down, you reduce your loan, which is good, But which also means to say you may not be able to enjoy the high interest rate that CBA board are giving you. Then for those of you who have HDB, you go and pay down your loan, not forgetting, once you pay down your HDB loans, you will not be able to extract equity from there. So there's all these questions you have to ask yourself. Finally, for those of you who are highly leveraged, and you, after all the mortgage stress tests, you realize that, hey, I cannot sustain this property. If interest rate go up to a certain level, you better sell. You better sell as fast as you can, when the market is still, right, in a way conducive for you. Okay, I know I'm running out of time, but I mentioned about Malaysia, right? So maybe just share with you, since there's quite a lot of Malaysia properties around here. All this while, I've always been concerned about the ringgit, that means Sing dollars. If you are to invest in foreign properties, one of the big considerations is always Sing dollars. Our Sing dollars will always strengthen over time. But government don't want it to spike up so much, which is why if you look around in the last 10 years, you compare with a lot of major currencies, Sing dollars has gone up. Because we need a strong Sing dollars to maintain a good inflation, a healthy inflation rate. But I think ringgit has depreciated quite a fair bit. For many reasons, drop in oil price, some of the certain economic uncertainty. But this is what is now. Can you imagine, right? If low oil price contribute to their depreciation of currency, I'm just saying that's one of the reasons. There's many other reasons. Then when oil price goes up, what will happen to their currency? Now, another thing to look out for is they have introduced GST. Okay, one of the good things about GST, I'm not saying GST is a good policy. I don't think many of us like to pay too much GST. And then there's so many jokes that are going around about Malaysia GST. So now the man also can only show the wife's 94% love. But GST from a national level is going to increase their coffer. If they can execute this properly, it's going to help them. Okay, so two factors for you to think about. A recovery of oil price, which is not the immediate time frame, but in time to come because of economic, and GST collections for the Malaysia government. That may be helpful for them. The other one to look out for is Australia. Okay, Aussie currency has also dropped a lot. That's because their natural resources, demand for natural resources is slowed down by China. But if China is to take off, then it will actually go back to their recovery. And for those of you who have just some spare money, looking out for what properties to look out for, one idea for you to look out for is, since a lot of major continents are printing money, reducing interest rate, equity investment. For example, last year, I've made a call to invest in China market. If you have done so, by now, you would have easily appreciated by more than 30–40%. Because the last 2 weeks itself, China market has a strong rally. Okay, so finally, you are to buy properties, right? It's really to make it a home sweet home, to have a successful investment. But because many of us take on mortgage loans, so this is very important to do a proper financial plan so that you can ensure that your property investment turn into a goal. And finally, right, if you have any other questions, feel free to email us. And, okay, I can't go off without promoting my book. Okay, so this book now, special price, $25. Bookshop, $30. And if you don't mind, I can also autograph. No, some people say, hey, don't dirty the book. But what this book really talk about is financial plans so that you can take on the right financial directions. And we have a lot of testimonials. The other thing we haven't had the chance to really expand on, exchange rate, those things that affect your investment decisions, credit cards, how to manage your debt. So all these things you can find there in the books. All right, so with that, really, thank you very much.